Good day traders, welcome back, new video, YouTube video. It's been a while. In this video we're gonna talk about how to trade gold and my approach to gold and how I see the markets in terms of gold trading, It's gonna be a very simple video, not too much difficult stuff, just a simple approach. Gold is an asset that I trade a lot. I really do enjoy trading it. The price ranges are pretty nice, and yeah, big ranges, definitely. Simple approach of gold. You can see we had right here had that nice bullish trend up from here to this low right here. So this is the nice price range. You can see price push it nicely to the upside, change the structure, push it to the downside right here. Pretty simple and accurate. A thing that I like to do with gold is mapping out those highs and lows on the 4H, 1H, even the daily level could prevail. And if you do that, you keep your chart clean and on point, and you get a good idea and understanding of the price range where gold is trading in. Okay, I will show you right now how I do that, just with a few and simple lines. I combine it, of course, with supply and demand areas. If you that low right here, and we can see a level right here. Just a few and simple lines to get myself comfortable and easy to see how price is trading within those price ranges. Most of the time those levels are even round numbers. For example, you can see right here 1800 level, 78 level right here, and price is respecting these levels pretty nicely, those highs and lows, especially if you combine it with those supply and demand areas, finding a great imbalance level right here. For example, you can see that this was a nice bias level for pretty a while, from 23 of September till almost the 13th, which is almost a 20 day of trading, not with the weekends, of course, with 5 days week. We had a nice bias level in place right here, which also confirms with that that bullish power right here, this low right here. More likely that was a weekly low or something like that, but not gonna too much in depth in that. Just want to give you a simple approach on how I look into it. So we had mapping out those lows right here, and you can see we had a nice imbalance level right here, which wasn't simply liquidity zone to trade off. You can see a pretty accurate level if you combine it with those lows. So it's important that the supply and demand areas are matching up with those levels. Okay, if you're moving to the hourly, for example, you can see how well price respecting those highs and lows, finding a nice and good level on the hourly, which confirms or levels with those highs and lows. You can see finding a nice level right here as well. Okay, calling an imbalance level, which is a valid supply or demand zone. Supply up front, demand below. This is not support and resistance. This is supply and demand, institutional levels, liquidity levels, where price is trading off. So that simply those institutional levels are pretty powerful. Why? Because price grab the liquidity there to fill all those institutional orders. Okay, we spoke in the few other videos as well, but this is a little bit more in depth. Nice imbalance level, great leg to the downside, price come back to this level for the first time, grab all that liquidity, seeing rejection candle right here, which is most of the time 80 to 90% way too early if you're gonna trade based off one rejection candle, because those institutional levels are powerful. But keep in mind, keep in consideration that they will take the best price possible to place their buy or sell orders in the markets. Okay, so this what you're seeing happening right here, which is simply an order grab. Okay, it's an institutional candle, a nice liquidity candle which grabs hard to the upside, grab all those orders, pushing all that buyers out right here. Those retail traders, we are retail traders as well, but we are a little bit more smarter, you know, we're a little bit more smarter. And you can see right here that there was a structure break to the downside. We see a push and leg to the downside. After that nice spike, you're moving to the lower time frames for a better execution, better risk to reward, manage your risk. Pushing to the downside, we saw that last wrap of orders right here, and after that we saw that big sell orders is coming in, which confirms with our lows and highs, like I explained it earlier. Just a simple approach of the market. You really don't need 300 lines or 20 different zones on your charts. It makes it only messy for the mind and for your psychology and for your emotions, because, you know, just riding the waves, following structure, simple as that. Want to give you one more example. For example, you had your short level right here. Again, move to lower time frames for better risk to rewards. Could be your first shot of short orders. After the liquidity move, tap down, last test to this level, order grab, and fill the entire range. Once again, not saying that you have to ride the entire range to the downside, but this is an option. Okay, this is definitely an option. Counter movement, if you're looking for a new imbalance level right here, a counter move, this was an option to long it. Okay, this was an option to long it. Just adopt for change, you know. The other is buying it, where the other is buying it, the other is selling it. Just not the exact risk to rewards, but just to give you an example from, yeah, my thoughts, my perspective of the markets. This could be a long, this could be a way bigger short, because you're following over structure. So don't get too, don't marry your trades. That is always what I say, you know. Understanding those levels to trade off, understand them, and mapping out your highs and lows, identifying those supply and demand levels, institutional levels to trade off. Be aware of the liquidity moves, which is gold. Gold has that a lot. If you're looking more to the left, you will find out this happen over and over and over again. Another asset that I like to trade as well is US30. It's a little bit less wiki, you know, but I will explain it in the next video for YouTube, you know. And pound yen is also an asset that I trade a lot, has also a pretty nice pip range with gold. And US30 has one of the biggest ranges there is. So this is a simply explanation on how I trade gold, how I see gold. Okay, right here we had that low in place, that 4H low. Okay, right here you can see price of tapping this level and start to reject again, you know. So now we see that double tap in this level, and we will find out what will happen by next week if we making a little bit more clean again. So right here, this is simply the price range we have. Okay, you can remove the levels right here, but just to give you a little explanation on a clean chart, a clean mind, a clean approach into trading, you know. And you can keep it as simple as possible and following structure, like I said before, highs, lows, identifying supply and demand areas, and trade based off that. Okay, super important. Right here we see another level, right here we see another level. So you can see how price is respecting those levels to the T, absolutely to the T. Hope you enjoyed the video. Like, subscribe, and up to the next. Okay, wish you all a great weekend. Ciao, bye bye.